might have heard some scary stuff about crypto prices dropping lately. What sparked this sudden drop? Was it the recent tensions in the Middle East? Or something else entirely? Hey everyone, welcome back to the House of Crypto Lords. Let's talk about the recent slump in the crypto market. In the past day, the total value of all cryptocurrencies has dropped by a whopping 8.7%, reaching 2.17 trillion. Bitcoin, the leading cryptocurrency, has taken the biggest hit, falling 7.5% to around 62,160. Ether, the second biggest player, isn't doing much better, tumbling 10.6% to roughly $2,900. So what's causing this crypto crash? Well, it all started a couple of days ago when tensions between Iran and Israel flared up. Iran launched some attacks in response to an Israeli strike, making investors nervous. This led them to pull their money out of risky investments like crypto and put it in safer places like the US dollar. The good news is things seem to be calming down. Iran says they're done with their military actions, and the crypto market is starting to stabilize. Analysts believe this drop is just a normal correction, and the market should bounce back soon. Here's another interesting thing. Almost $2.5 billion worth of crypto positions were forced to sell in the last couple of days. This is because some traders borrowed money to buy more crypto, betting the price would go up. But when the market went down instead, they got squeezed and had to sell to pay back their loans. This selling pressure made the crash even worse. On a more technical note, some analysts say this could be a bull flag pattern. Basically, the market has been trying to break through a certain price point, but keeps getting pushed back down. This might be a sign of a future jump, potentially reaching over $2.5 trillion by the end of April. So, is this the end of crypto? Not by a long shot. The market is still up overall, and analysts are still pretty bullish. This might just be a bump in the road before things take off again. But hold on, there's more to the story. Here's a deeper look at what might be happening. War jitters and shaky safe havens. Normally, when there's war talk, people tend to buy gold because it's seen as a safe investment. But this time, even gold prices went down. This tells us that investors were just feeling panic and selling everything, not just risky stuff. The US dollar on the rise. Again, the US dollar, often considered a safe haven, has been climbing steadily. It recently broke through a key level, which surprised some folks. This could be because everyone's running scared. But remember, the dollar went up in 2023 right before the market crashed. Kinda spooky, huh? Bitcoin's surprising strength. Even with all the bad news, Bitcoin hasn't fallen as much as some people expected. There's a big event coming up in the crypto world called the halving, which some believe will make Bitcoin prices skyrocket. But the market isn't reflecting that excitement yet. It seems like the rising dollar and other jitters are keeping a lid on Bitcoin's price for now. Interest rate cuts. Maybe not? Earlier, everyone thought there would be multiple interest rate cuts this year. Now, it looks like there might only be one. This could be because stock prices are still going up, even though inflation is high. It's a bit confusing, but that's how the grown-ups play the money game sometimes. Stock market taking a breather. The stock market is another interesting puzzle piece. Even though there's been bad news, stocks haven't crashed. But here's the thing, we might be nearing a resting point, like a runner catching their breath before the next lap. Here's what to watch out for. Stock prices might drop a little bit from their recent highs. This wouldn't be a huge crash, just a pause. April, May, and June are historically times when stock prices don't go up or down much, kind of like a trading game where everyone waits to see what happens next. Don't get greedy hoping for a massive dip because that could signal trouble. The halving myth. Some people believe that the halving event, which reduces the amount of new Bitcoin created, will automatically make Bitcoin prices go up to $100,000. But some experts say the opposite might happen. Here's the deal with altcoins, the smaller cousins of Bitcoin. They've been hammered way worse than Bitcoin in this recent dip. This highlights the risk of putting all your eggs in one basket when it comes to crypto. So what does it all mean? Altcoins have probably reached their peak prices for now. For Bitcoin, a clear signal of a peak would be a drop below $55,900. Otherwise, expect Bitcoin to bounce around between $74,000 and $59,000 for a while. The good news? As long as Bitcoin stays above $48,000, the long-term outlook is still positive. Interestingly, people haven't been as scared during this bull run compared to previous ones. This means there might be a short, sharp burst of panic selling before things pick up again. Looking ahead to the halving. Here are two ways things could play out for Bitcoin after the halving. Breakdown. If Bitcoin falls below $64,500, it might revisit the lows around $55,900, which would confirm a peak and disappoint those hoping for a surge to $100,000. sideways grind. Another possibility is that Bitcoin gets stuck in a holding pattern, like after the 2020 halving. This might happen because investors got a little too excited before the recent dip. While this wouldn't be ideal for quick profits, it could be a healthy sign for Bitcoin's long-term growth. A bright side? This whole thing might actually be good for crypto in the long run. Here's why. Market chill out. A cool-down period allows the market to take a breath after a big run-up. This can set the stage for a more stable and healthy bull run in the future. Right-size cycle. If the recent rise was fueled by too much excitement, a correction followed by some sideways movement could lead to a more measured and sustainable growth period for cryptocurrencies. The takeaway for crypto investors: spread the risk. Don't put all your money in one crypto. Invest in a variety of cryptocurrencies and other assets to avoid getting burned too badly if one thing goes south. Be patient. Crypto is a wild ride. Stay focused on your long-term goals and don't freak out if there's a dip. Remember, nobody gets rich quick unless they win the lottery, and even then, they might mess it up. Keep learning. Take some time to understand charts and technical indicators. This will help you make smarter investment decisions based on real information, not just hype. The future of crypto is uncertain, but by understanding the recent events and keeping a long-term perspective, you can navigate this crazy market with more confidence. Stay tuned for updates. If things change dramatically over the weekend, we'll be back with another video. Otherwise, have a great week and happy crypto adventures.